Jesus. Come on. Press it like 10 times. Good afternoon, everyone. Can you hear me okay? So, what's this about? Well, I got to tell you, I know I've been a broken record about this, but you got to short on the way down or buy on the way up. And I got to tell you right now, last week the S&P was down 5 straight days. And I'm telling you, I watch a ton of sites, and I can't stress enough on how I probably saw 95% of the trades were buying calls or buying stock. You got to learn how to do both sides of the equation. I just can't impress that enough. When I dual broadcast, the bandwidth messes up. So I'm going to have to exit one of my instances of Thinkorswim. Give me a second. Great. So just to let you know on what we're watching in here, number one, you're getting bear flags today. So Jack called this perfect in our chart patterns mastery room. So just, I'm going to have to reset all this. Give me a second. Like I said, bandwidth is a pain in the rump sometimes. There we go. So just what we're watching in here is bear flags. This is all about bear flags. Like I said, I watched more sites and all they did was buy on the way down. Now, the problem with that is if you buy on the way down, you'll probably end up okay in the long run. I mean, the markets go up in the long run, but the problem is you might blow out first. So let's go over what a bear flag is. I did a class. I don't know where you can find it on Simpler, but I did a paid class on the art of selling short, which a lot of you made money on. So, which is great. But I want to show you what we're talking about in here. So a bear flag is after a prior sell-off, you get a consolidation. Does anybody notice something about the 15-minute ES? Am I the only one that sees it? That's a bear flag right there. Now, it doesn't have to be a pull that's straight down. It can be this. That's a bear flag. If it doesn't hold here, you're talking about giving back everything from Friday. You heard it here first. So the key is what to key off of. You know, I did this in the Essentials room and the YouTube live last week. So what are we talking about in here? We're talking about what made markets go down last week. Now you might say, why the hell are you showing that? I thought you were going to show bear flags because there's a time and a place. Yeah, Joe, did I call that? The ES was only down 2 when I just mentioned that in the central room. How did that work? I think that worked pretty damn good. So definitely, I hope that worked for you. If the expected move starts to go up, then you're more likely to have air holes on the downside. I just talked about this in the central room when the ES was down only 2. So keep that in mind. All right, bear flag. The other thing about a bear flag is it's a consolidation. Yeah, you're not selling the top. You're selling the direction. So the next thing about a bear flag is how do you know a valid bear flag? A bear flag is more likely to work if the thing that made you go down all last week, a la the Russell, keeps going down, and the ES is bear flag's more likely to work if you have no support on the downside. So, Jack, how did the NVIDIA bear flag that you pointed out work? Pretty damn well. Look at that. That's a bear flag. Wow. So now just keep in mind that the tighter the pattern, the tighter the stop. So if you have a tight price pattern, it's a lot easier to get stopped a little, get stopped in. So just to let you know, like we were just putting in the bottom of the chat, we were shorting like a 119.20 and buying back a 119.30. And then the next thing, you short it again at 119.30 and you make 3 points, 4 points. That's the key. The tighter the pattern, the tighter the stop, and you can always get right back in, as you see. So it worked fine. So the tighter the pattern, the tighter the stop. The next thing, the probability of this breaking down goes up dramatically if the thing that made the markets go down last week is testing its low. So just go look at the Russell again, and I'll show you what we're talking about. The Russell is testing where it was at 2 o'clock on before that madness on Friday. If you just joined us on Friday, I was showing this. You know, I like to show a lot of graphics. So on Friday, I was showing this. There was $14 billion to buy on the close. So we thought the market would go up. End of the month buying. And the market went up. So the market made back what it lost the day before, but that's because of last minute buying. That's very unhealthy. Very unhealthy. Number two, now that the Russell gave back everything right here, and the Russell is what made the markets go down last week. Like I said, I was in the essentials room last week explaining why that was important. And it is. So as you see, that's going on. This has made it all back. So why shouldn't the ES break the bear flag and go back to where it was at 2 o'clock? There's no support. So there's your bear flag, and there's it working. Like I showed you when I was in the room about paper trading, here you go. So I'm up 27,000 on a 20 lot. So just to let you know, paper trading, but let me show you the entry and the exit. I just can't stress this enough. Go and do a paper trading account. Where did I short it? In the bear flag. Right in here. Where was my stop? Up here. So where am I getting out? I'm getting out here. Damn right. That's where I want my order. I'm putting it 40 points later. So just keep that in mind. Create an order. Now, keep in mind, though, it's a little rough because Trump's going to be talking. But theoretically, the lower the Russell goes, the more likely this is going to here. More likely. On the other hand, you have that little twerk. So if you're short, it doesn't hurt to take back half, just to let you know. Like I'm going to do. There. I bought back 10. Why'd I buy back 10? Even if it's a bear flag, because Trump's talking. Number two, go from support. So put this side by side. Now, keep in mind another thing that we talk about all the time. Overbought and it retained its bearish structure. Do you see that? Overbought and retained its bearish structure. So just keep that in mind in there. So it was overbought and stayed looking like a bear flag. Keep in mind, it might be overbought and go all the way up to here. That's why I had stops up there. But theoretically, and I'm going to take this off in here. Theoretically, this goes to here. Now, the other thing about a bear flag is this. You want to look at what the expected move is. A bear flag objective is the prior move down. 65 points. Do you see that? 65 from the high. I don't care about the high. I'm talking about the pole. So take 65 from the breakdown. And be logical about this. What do I mean by logical? What I mean by that is if the support is in this zone and the Russell's in that zone, it might not go to the expected move, might go less. But to me, where am I buying it? I'm buying here. So you take the first part and you take your profit. See that top right here? So you can put it side by side with the Russell. So let's put it side by side. So you're looking at that bear flag, but you're looking at where the Russell is. So the Russell is undercut that little top. So why shouldn't this undercut the little top? But heck, Trump's talking. So you always take a profit on half. So now you're talking about this. You're talking about the Russell is down to this lower rung. Just keep in mind this on the right here. And also keep in mind it was overbought. But now take this. So you have this move on Friday. Like I said, why are you keen off the Russell? Well, this was also in the essentials in the YouTube live last week, and I'm happy to go over it again. So, and I'll show you. But the key is the Russell is under the 200 moving average. Combine multiple factors. There's no bot or this or that that's a holy grail. The reason I was able to train so many traders successfully when I was with that day trading firm for 9 years. And the name of the firm is ETG. You're welcome to check up on me. Seen me in the top 5 out of 800 traders for all 9 years. I trained between 20 and 40 traders, every single one successful. Why? Because I showed them the correct direction. I didn't press a button for them, but like today, Chart Patterns Master, I showed you the correct direction. Central Room, I showed you that we were going to have an air hole. So I hope that worked for you. But getting back to it, if the Russell is back down to here, then why shouldn't the ES be back down to here? Just keep that in mind. You can always buy it and take your big profit. Nothing wrong with that. But like I said, if this went up and because of the Russell, then if the Russell is giving it all back, why shouldn't this? So just keep that in mind in there. Big deal in my book. In fact, for me, you might say, why aren't you buying back like 5 more? Yeah, you probably should. Then let the rest ride. Sure. So I'll buy 5 more back. Remember, it's also a financial decision. But the way you stay in this market is, number one, if you want to cover some on the way down, totally understand that. Totally understand. Because you're playing with the house's money now on 5 of them. I was short a 20 lot. So just keep that in mind in here. So, but the key is the thing that made you go down is still going down. So why should this go up? So now you have a couple of other things to look at in here. Let me show you what they are. Number one, like I said, when the Russell's going down, bear flags in all the stocks we watch are more likely to work. So where could the NASDAQ go? Well, the NASDAQ has hit that area. There's your bear flag. Look at that. Isn't that a thing of beauty? Look at that. That's a bear flag. Like I said, I would say 95% of sites I see, all they know how to do is buy stock or buy calls. Got to know how to do the other side when it presents itself. Not a perma bear. Not at all. But if you see a bear flag, it's a bear flag. That's all I mean. So let's go back over it now. And Joe, how did that work about the expected move? So if you were wondering, I was in the central room and I was saying that if the expected move in the SPX was starting to go up, that usually leads to an air hole in the ES. Now you might say, how do you know it doesn't mean it's going up? because usually it means a hair will hold on the downside. It's just the way it is. So just the way it is. You might say, but it went up on the close. That's just end of the month garbage. Right now, Russell giving back it all. Transports giving back everything from Friday. And like I said, go to a daily chart and you'll see what we're talking about in here. We're talking about the 200 moving average. And we're talking about this. We're talking about the 200. And we're talking about the transports and the Russell are under the 200. The NASDAQ and the ES are over it. Everybody thought the Russell this morning was going to try to reclaim the 200. Well, it didn't. It failed miserably. So when that happened, bear flags in individual stocks were more likely to work. That's all it means. It was more likely to work. And that's what happened. So just keep that in mind. So let's go over how you find bear flags. So I can't share this in the YouTube live, but I can share it in the essentials room. And I went over this luckily in the central room when I was on. And by the way, Chart Patterns Mastery, we're still short JP Morgan. Good one. So we're short the JP Morgan. So keep that in mind. All right, so let's go back into it and I'll show you on how I scan for them, or one of the ways. Just keep that in mind. Now, the problem is that Thinkorswim blew up when I was dual broadcasting, so I have to go and put up another instance of it, so give me a second. Remember, one of the things about making money trading is keeping it. Because you might say, like, why aren't you staying in all 20 shorts? You're not staying in all 20 shorts because, number one, you're near support and you have Trump talking. You never know. You saw what he did to Bitcoin. Bitcoin went from 82 to 94. So just keep that in mind. All right, so let's go into it so you know what we're talking about. Let's take, well, there's a bear flag in Walmart. But let's go take a scan. So we're going to take a scan in here. I showed this earlier. This is a squeeze scan, and luckily it's in here. You're taking a 5-minute consolidation. Just because it's a, how many in there have seen all of this? Have seen that every time you see a squeeze, they talk about it as a buy. No, a squeeze can be on the sell side. Just keep in mind, almost every bear flag or bull flag is a squeeze. But every squeeze isn't a bull or bear flag. I'm being picky. So just keep that in mind in here. And like I said, always look at, nothing is a holy grail. If the thing that made you go down was the Russell, and the Russell starts going down, the bear flags are more likely to work. Know what to key off of. That was in the YouTube live from last week. I think it's on YouTube. I don't know. I don't know where I'm promoted. So just keep that in mind. All right. So here you go. A consolidation on a 5-minute, and the close is less than the 5-minute and lower than the 15-minute. Well, it's a little late. So I'm going to show you a different way. I just want to show you in hindsight what would have worked. So a 5-minute, a 5-minute, and a 15. Now, there'll be longer term. If you want to do an hourly bear squeeze, that's fine too. So let me share this with you. I shared this in both rooms earlier. I'm happy to share it again. I can in the YouTube live. And I laid this out for you about the logic of it. You can have a bull squeeze too, but they're less likely to work if the whole market is taking a dive. If the Russell goes down, then this is more likely to go straight down. So just keep that in mind. So let's get back into it. We're going to take this in a different way. And what do I mean by that? We're going to take we're going to take a 6 grid 4 squeeze. But then I'm only going to take 2 charts. I'll show you. There. So we're going to take a 15 and a 5. We're going to take a number of stocks. So sorry about that. I hit the mic by mistake. I'm not out of frustration. All right. So let's take NVIDIA. Well, guess what? Yeah, there's your squeeze. That would have showed up on a squeeze scan. Under the ATR trailing stop, under the ATR trailing stop. So you're determining it's in a downtrend. A bear flag in a downtrend is more likely to work. A bear flag when the Russell is getting killed is more likely to work. So as you see, it worked. See that on the bottom? The dots is a squeeze. So keep that in mind. It's a squeeze. So let's see some more. Let's go to the ones we know and love. How about Apple? Did it have a squeeze? You had a squeeze. So everybody's like, oh, that's bullish. It's in a bear under the ATR trailing stop on a 5 and over it on a 15. What's that mean to me? Take it off your screen. Doesn't fit the criteria. Wouldn't have shown up on a scan. Let's take something that's getting annihilated today. Probably a lot. Like I said, you need to know how to play both sides of the market. I can't stress that enough. Both sides. So how about that? Under the ATR trailing stop, under the ATR trailing stop with a squeeze. Which way was it more likely to go? Well, you had the bear flag. So it worked. Let's take something else annihilated today. How about Fresh Pet? Funny, I just bought Happy Feet. We call it Happy Feet for our dogs. So did it have a bear flag? Yeah, right here. So not everyone is going to come up. That's why I visually inspect them too. How about Broadcom? Yeah, there's a bear flag right here. Now, it's not perfect because it went up first. That isn't your strict interpretation. But at least when you see a squeeze, you can draw a defined trend line. That's a triangle, not really a bear flag. But like I said, I hope this is helping you. Let's take Humana. Everybody loves Humana. Bear flag, under the ATR trailing stop, under the ATR trailing stop. Do you buy on the way down? Absolutely not. Like I said, in the long run, probably you get bailed out and everything in their mother because, markets tend to go up. But I'm really into initiation. I like to do it correctly. Caterpillar, bear flag, bye-bye. Reversal candle and a bear flag. A lot of times you get those big red candles that form the pole. And you have a bear flag. Look at that. So a bear flag is a bear flag. ARM, bear flag. Bear flag. Yeah, it's a beautiful thing. That's why I'm showing you that scan. Obviously, if the market's down, you're not going to get a lot of results because they've already broken down. Just keep that in mind. They've already broken down. First Solar, bear flag. Did it show up as a squeeze? No. That's why a lot of times I have up 8 million charts so I can look for them. What in here looks like it did have a bear flag? Let's just do it that way. So, Jack, I know you identify these all the time. So does DJ. So which one in here has a 1 minute bear flag? Does anybody see it? It sure looks like Lamb Research. Yeah, what else? If I zoom out, how about JP Morgan? What was the only trade I posted up there for you? A short in JP Morgan. Yeah, look at that. 1, 2. Which one was tighter? JP Morgan. Now, the only thing I regret, Jack, is I didn't really get aggressive in NVIDIA. I did a little, not a lot. But you see the bear flag. At least I hope you do. And these are more good. So just keep that in mind. Sure, I can share that. No, for you, no, Nathan. So it'd be $997. No, just kidding. Let me share this with you. Sure. There, 2 grid. Now, keep in mind, I have a lot of different kinds of 2 grids. So I want to make that clear. Keep in mind that when I'm, and it's still called a Brecher ledge. Just let you know, that's a ledge, a sell-off and a horizontal trend line consolidation. That's a Brecher ledge. Yeah, that was a good one. Thanks for mentioning that, Kevin, in the YouTube live. But the point in here is that you could go through these. And like I said, Nathan, I have a number of different charts, but when I'm day trading, I use a 20 period and an ATR trailing stop. I don't use a 50. Number 2, and this is one of the biggest misnomers and the way I've watched people lose their butt. On the way down, do not use moving averages as your support. Use price as your support. And 2, if you're buying, you better have a turn. Look at this. Where would you buy it? You wouldn't. So just keep that in mind as well. Like I said, if the expected move goes up, then this is more likely to go down. If the Russell is undercutting where it was at 1 o'clock on Friday, then the ES is more likely to undercut where it was at Friday. So that's what we're doing. So just to let you know. So in fact, you might say, well, why aren't you getting out of the rest of in trading view? Well, let's go to it. So S&P, where do I think it's going? Well, let's take it again. Where's the bear flag objective? Here. Do I go for the gusto with Trump talking? Do I go for there? Nah. I'm probably going to just buy it back. That's all you need is something to come out. There we go. There you go. Started at 100,000 today, just so you know. Yeah, that's pretty good. So, bull and bear flags have played both ways. So, Jack, not bad. But getting back to it in here, like I said, NVIDIA, bear flag. I don't know why everybody loves these stocks. Fall in love with a pattern, not a stock. Bear flag worked. It's a bear flag. Bear flag. There have been bear flags all the way down. The moral of the story, it's been in a friggin' downtrend. So a bear flag is more likely to work. So just keep that in mind. Like I said, why should the ES not go to where it was on Friday? I mean, tell me why. The Russell's done it. Why shouldn't the ES? So that's what I wanted to show you. Combine multiple factors. See this? That's your bear flag. Luckily, I called it for everybody in the Chart Patterns and Central room. So take care. Have a great one.